Okay. Moving on. This one problem was left out. Let's do this one. PQR Limited is considering investing in a project which requires funding of rupees 150 crores. Finance manager of the company has presented two financial plans for which information is as follows. Plan A, equity debt. Plan B, equity preference shares. Cost of debt is 10%. Cost of preference share is also 10%. Tax rate 25%. Equity share of the face value 100 will be issued at a premium of 50 per share. Expected EBIT 60 crores. You are required to determine earnings per share for plan A, plan B, financial break-even point for plan A, plan B. I'm going to add one more thing also. Financial break-even. They have not asked indifference points. Let me solve that also. They've asked only break-even point. Okay. For discussion purpose, I will also solve indifference points on this. First, anyway, let me solve earnings per share. So let's calculate EPS under two plans. Plan A, plan B. The format, let's write it. Starting from sales, but I don't have to start from sales. They said EBIT given. Let's start from that. EBIT minus interest will give you EBT minus tax will give profit after tax. Here we have preference share dividend also. So minus PSD, preference share dividend. Then we'll get earnings available to equity shareholders. EA to ESH. Earnings available, profit available to equity shareholders divided by number of equity shares will give you EPS. Will give you EPS. Have the format, then we'll write down. While writing, please make sure you understand very clearly. Any doubts, get it clarified. Because solving the problems by somebody else is like watching a film in a film theater. Somebody else perform, you just sit and enjoy. But examination is not film theater. Examination is operation theater, where operation will be performed by the surgeon, that is institute, with anesthesia, that is question paper. You don't realize in the examination hall the pain. Anesthesia is on. Once you come out of the exam hall, you start discussing with your friends. Then you start feeling the pain. Anesthesia slowly comes down. After 2 months, result comes. You know the result. Operation success. Patient died. Means you have passed all the subjects, aggregate, still a problem. Anyway, it is not that CA exams are difficult, it is just that we don't pay enough attention to the details. So the simple key is easy to say, difficult to apply. The simple key is focus, concentration. So as much as possible, try to understand each and every aspect when you're reading thoroughly. Read slowly but read thoroughly. The effectiveness will increase. If you can have focus more, you don't have to do many revisions. Anyway, let's come back. EBIT given as 60 crores. Yeah, I can do rupees in crores. So EBIT 60. Interest, plan A. They take 80% debts, which requires 150 crores, 80%, and cost debt 10%, rate of interest 10%. 150, 80%, 10%. So 150 crores, 80%. So 120 crores you get 10%. I think you get 12 crores. Now again, here you have to understand an important interpretation. FM is not governed by law, it only governed by principles. Take a look at this. They use the word cost of debt. Sir, cost of debt means after tax, no? So if after tax is 10%, how much should be before tax? That is why don't go by the words, understand by the context, intention behind the information. So here they've given plan A, plan B. Plan A costs so much, plan B costs so much. So it's a plain English. So we have to understand, interpret this cost of debt as rate of interest. No need to go too much technical and say cost of debt is after tax, how much is before tax. Not required. Anyway, so interest, this is 12. So EBT, you get 48. Tax rate 25%, that is 12. So PAT 36. Preferential dividend will not come here, will come only in plan B. Earnings available to equity shareholders 36 crores. Divide by number of shares. You are going to issue for 20% equity and number of shares will be 100 each at a premium of 50. So 150 crores is the amount required into 20%. 80% debt, 20% equity divided by issue price. 100 rupee at a premium of 50 means it is issue price at 150. I think you get 0.2 crores. So EPS 36 by 0.2. 18. Okay, plan B. EBIT same 60. Plan B not using any interest 0. So EBT is 60. Tax 25%. So 15. 45. And they have preference shares. Dividend 40% and cost also 10%. Okay, so the amount of preference shares 150 crores. You are going for 40% preference share, so 40%, and 10% is the preference share dividend. So 60 into 10%, 6 crores. This is 39. And number of shares will be 60% you're going for it. So 150 of that 60% divided by 150 issue price. So you get 0.6. So 39 by 0.6. 65. Okay, so part A of the problem is done. Let me go for part B. Financial break-even points. Can you repeat the interest after tax? Okay, that portion. In this problem, they have given cost of debt as 10%. But what we have taken 10% as interest, rate of interest. That's how we have interpreted. I was explaining about that. But if you see pure technical point, rate of interest is not equal to cost of debt. Rate of interest into 1 minus t is cost of debt. So if you think pure technically, how do you arrive at rate of interest? Rate of interest into 1 minus t is cost of debt. So cost of debt by 1 minus t should give you interest, right? If you think pure technically, but we are not applying that context. We are not applying that pure technical interpretation. Why? Context. They have plans. Preference share cost you so much. Debt cost you so much. So the intention behind using these words is interest and their preference share dividend. So I have not done any adjustment for 1 minus t to differentiate between cost of debt and rate of interest. We are assuming in this context, cost of debt means rate of interest. Hope you get that point. How did 88%, not 8%, 80%. It's not 8%, 80%. You're taking 80% debts. Of the 150 crores, you're taking 80% debt. So 150 crores into 80%. On that, 10% interest. Do we have to write an assumption? No, not required. If you have time in the exam, please go ahead. But you don't have to write it, these interpretations. If you have time, you can do. But these are all regular things which is taken care normally by institute. So separate assumption for this not required. Okay. So let's go for the second one then. Financial break-even point. Okay. Basically, break-even point, you know. Break-even point means EPS should become 0. Financial break-even point. So this mathematically, at what level of EBIT, what is financial break-even point? I'm writing. At what level of EBIT, EPS becomes 0. So basically, if I draw a graph, like this, this is EPS, this is EBIT. When EBIT changes, EPS also will change, you know. So if I draw a line, this is one plan. No? When EBIT changes, EPS will change. This point, when it crosses EBIT at 0 point, EPS is 0, EBIT is so much. This is called as break-even point, financial break-even point. And you will have one more line. This is one plan. Like in this example, we have one more plan. That will give me one more line. Let's say something like this. This should also be a straight line. Try to draw a straight line. Okay, something like this. This intersection point is there, right? Where the two line intersects. This is called as indifference point. Indifference point. Did you understand the point? When the line passes through x-axis, for a 1 1 line, 1 1 time it passes through x-axis. That's called as break-even point. Even this point also is break-even point actually. I'll just draw once more. You see, if one line goes like this and another line goes like this, these points, right, when it passes through the x-axis, that's called as break-even point. When it intersects with each other, that is called as indifference point. Hope you understood what is the meaning of indifference point, what is the meaning of break-even point. That is logical part. Let us calculate now. Break-even points. We have two plans. Two plan means two lines. For one line, you will have one time intersection here. I mean, one BEP will be there. For one more plan, one more BEP will be there. Okay. So break-even points for plan A separately. For one line, one passing through the point. So for A, break-even point separately, and break-even point for plan B separately. Okay. Now, break-even point formula will be this. What should be the EBIT such a way that your EPS should be 0. Now, please imagine. Just try to tell me. Assume no interest, no preference share dividend. No interest, no preference share dividend. If EBIT is 0, then what will happen to EPS? EBIT 0, no interest, EBT 0. If EBT 0 means tax also 0. Tax 0 means PAT 0. PAT 0 means everything is 0. So EPS also will be 0. So basically, if no interest, no dividends is there, EBIT 0 means EPS also will be 0. But what if interest and dividend is there? Take it. So EBIT formula is given by interest plus preference share dividend divided by 1 minus T. Why is that, sir? Interest is interest. That comes before tax. But preference share dividend, where does it come? Preference share dividend is subtracted from PAT, which means preference share dividend is after tax. But I want EBIT before tax. So after tax, how do we convert it into before tax? Simple. Divide by 1 minus T. If you want after tax, multiplied by 1 minus T. If you want after tax, multiply by 1 minus T. If you want before tax, divide by 1 minus T. So that's the formula. So in the first case, for plan A, interest is 12 crores. There is no preference share dividend, so nothing part. So it should be 12 crores. So in the plan A, instead of 60 crores here, if I write 12, basically it becomes 0. How, sir? 12 minus 12, 0. 0 minus 0 tax, 0 by number of shares. Anyway, it will get 0 only. Verification also done. For plan B, the EBIT should be interest 0, but they have preference share dividend. How much preference share dividend? 6. Divided by 1 minus tax rate. Tax rate 25%. Six by 0.75, 8. So when EBIT is 8, EPS becomes 0. How, sir? See, if EBIT is 8, no interest here, this becomes 8, 25% tax, 25% on 8 is 2, you get 6, preference share dividend is 6, you get 0 earnings, 0 EPS. Got the point anyway? That is logical part. You don't have to write it. The formula for break-even point is very simple. Interest plus preference share dividend divided by 1 minus T. Okay. In this problem, they have not asked this point, that is the intersection point, indifference point, but let us also do it so that we cover all the aspects. If they ask in some other problem, we should be ready for it. Hope you have done till here. Okay, very good. Let's calculate indifference point, intersection point. Indifference point in intersection point. So basically, the EPS should be same under both the levels. At what level? At what level of EBIT? EPS is same, not EPS 0, okay? EPS 0 in break-even point. Here EPS is same for two plans. See, break-even point comes for every one plan, one plan, one break-even point. But here, when the two plan comes, the intersection point, EPS is same. That is called as indifference point. So basically, we should write EPS under plan A should be equal to EPS under plan B. How do we write it? The EPS calculation, we have written in the vertical format. The vertical format, make it into horizontal format. How? EBIT minus interest 1 under plan A. What is EBIT minus interest? EBT convert after tax. How do we make it after tax? I multiplied by 1 minus tax rate minus preferential dividend whole divided by number of shares, equity shares. Option 1. This should be equal to same formula but different values. EBIT starting point minus interest will give you EBT into 1 minus T after tax, we get profit after tax minus preferential dividend 2 different amount will give you earnings available to equity shareholders divided by number of shares 2. Under this will give you EPS. EPS should be equal. Let's assume EBIT as X. If you remember your X, then you can assume some other alphabet. Let's assume EBIT as X. Interest in first alternative is 12. Tax rate 1 minus 0.25. No preferential dividend in the first case. Divided by number of equity shares, we have calculated 0.2. E should be equal to EBIT X minus interest in the second case is 0 into 1 minus T 1 minus 0.25 minus preferential dividend. Here preferential dividend will come, that is 6 crores divided by number of shares 0.6. Let's simplify. This 0.2 and 0.6 I can simplify. This is 1, this is 3. 0.2, 0.6, 1s are 3s are. Then I can cross multiply 3 into x, 3x, 3 into 12 into 0.75. 3 into 12 into 0.75, 27. Equal, this is 1 only, so remains as it is. 0.75 into x, 0.75x minus 6 as it is. 0.75x comes left side, 3x minus 0.75x 27 goes to right side, becomes plus 27 minus 6. So 21, 2.25x. So x is 21 by 2.25, 9.33. Which means if EBIT is 9.33, under plan A also EPS will be same as plan B. Not equal to 0, but both plan will have same EPS when EBIT is 9.33. Please check if the calculations are fine. Oh, I forgot to multiply 0.75, right? Oh, that's a mistake, no? Oh, that's a mistake. Yes, yes. That's a calculation mistake. Let me correct it. So 0.75 into 3 into x. Yes, this is not 3x, I'm sorry. 0.75 into 3, that is 2.25. Yes, this is 2.25. 2.25. So 2.25 minus 0.75 means 1.5. So 1.5. 21 by 1.5. 14. Yes. I think 14 is what you get. Please check it if any other mistake is there. Okay, hope it is done. Okay, I'll move forwards. So we have done with the cost of capital. We have done with the capital structure theories. Now we'll go to one more very small, interesting chapter, but do come in exam. Equally important, leverage. Leverage. Basic structure I will tell you, then we will go for the formulas. You know, when I prepare income statement, P&L accounts, can you tell me what will be the starting point? It's also called a stop line in technical words. In P&L, income statement, the starting point will be revenue, sales, correct. Starting point is revenue, sales. What is the ending point in P&L account? Last line. Last line in any income statement. PAT, but even before, even after that, even below that, we go one step further. That is EPS, right? That will be the last point. So whenever a news comes, like stock market also, some Tata Motors have got some investment. Tata Motors have got some good sales. Their share price will increase. Why? Because if somebody makes good sales, their profit will increase. That's always been our regular understanding. If you make a good revenue, you'll make a good profit. So sales and EPS. But now, if sales, let's say, imagine, increase by 10%. If sales increase by 10%, do you think EPS also will increase by 10%? If sales increase by 10%, net profit will also increase by 10%. No. Why? Because of fixed elements. When sales increase, fixed cost will not increase. Interest cost will not increase. So EPS will change more than 10% actually. How much? Is leverage chapter. So let's call sales, and we have operating a profit, which is basically EBIT, operating profit. So when sales changes by certain percentage, how much operating profit will change? This is called as operating leverage. And formula wise, it is contribution. Contribution means sale as variable cost divided by EBIT. So if operating leverage comes to, let's say, 8, what do you mean by that? If sales goes up by 1%, operating profit will go up by 8%. Operating leverage connects the 2 points, sales on one side, operating profit EBIT on other side. If sales increase by 1%, operating profit will increase by 8%, operating leverage. Similarly, what connects from operating profit to EPS? That's called as financial leverage. That is given by EBIT divided by EBT. If suppose it happens to be 3, means if my operating profit increase by 1%, my EPS will increase by 3%, 3 times. And what about overall? What connects from beginning to end? What connects from beginning to end? That is from sales till EPS. That's called as combined leverage. That formula is contribution divided by EBT, or you can do operating leverage into financial leverage. So if sales changes by 1%, how much EPS will change? That is given by combined leverage. And in general, higher the leverage, it means higher risk. Higher the leverage, it means higher risk. This is all leverage is about. You should know the formula and you should know what it connects. That's all required. Interpretation, higher leverage, higher risk. Because when things goes well, you make more profit. If things comes down, corona hit, first wave, second wave, third wave, your profit also will be down in a faster wave. If it's going up, you make more profits. When the way down, you make more losses. Because of the nature of fixed interest, fixed cost and interest. They don't change. When sales increase or sales decrease, these two elements remain same, causing these leverages. Okay, if you want, you can take down. I'll go for problems. Hope it is done. Let's go for problems. The following data is available for Stone Limited: sales, variable cost, contribution, fixed cost, EBIT, interest, profit before tax. Using the concept of leverage, find out the percentage change in taxable income if EBIT increased by 10%, the percentage change in EBIT if sales increase by 10%, the percentage change in taxable income if sales increase by 10%. Also verify results in each of the above case. So for to understand all these things, let's find out the three leverages. So operating leverage, financial leverage, combined leverage. Operating leverage, you can see the formula goes in a vertical manner. Contribution divided by EBIT, EBIT divided by EBT. See, it goes in simple sequence. So operating leverage, contribution divided by EBIT. Financial leverage is EBIT divided by EBT. Combined leverage, contribution divided by EBT. So contribution 3 lakh divided by EBIT 1 lakh. So operating leverage 3 times you can say. Financial leverage EBIT 1 lakh, EBT 75,000. $1.33 times. Contribution 3 lakh divided by EBT 1 lakh. Sorry, 75,000. EBT means taxable income. 4 times. And also remember, what does operating leverage connect? Let me write down. Operating leverage connects the sales and operating income. What does financial leverage connects? Operating income with taxable income or EPS. You can say EPS or you can say taxable income. In this problem, they say taxable income means EBT. So I will say EBT. And what does combined leverage connects between sales and EBT? You should know which one to choose to interpret. Write down this part. Then we'll do the interpretation. We'll do the calculations remaining. Okay. Now, let's go for the first part. The percentage change in taxable income if EBIT changes by 10%. Now, can you tell me what leverage should I use here? It should connect between EBIT. EBIT means operating income. Operating income. Operating income and taxable income. EBIT and EBT, you can say. We should use operating income and EBT, taxable income, financial leverage. So that's the first one. using financial leverage. Let me write what is the meaning of this. It connects between EBIT and EBT. It is 1.33 times, which means if EBIT changes by 1%, EBT will change by 1.33 percentage. And what they told? EBIT increases by 10%. So if EBIT increase by 10%, how much will EBT cross multiply? 10 into 1.33 divided by 1. That is 13.33, you can say. So it's a recurring number, 13.33%. Okay, let me do verification. Okay, so what will be the new EBIT will be? EBIT is 1 lakh increased by 10%. So 1 lakh plus 10% means 10,000. So you get 1 lakh 10,000, I think. Less interest. Interest will remain same. 25,000. So what will be the new EBT? 1 lakh 10 minus 25, 85,000. So what is the percentage change? How do you calculate the percentage change? What was the previous EBT? It was 75,000, right? 75,000 became 85,000. 75 became 85. So what is the increase? Increase is 10,000. Increase 10,000. But percentage terms, how do you calculate 10,000 divided by existing one? 75,000. 10,000 divided by 75,000 into 100. You get 13.33 percentage. Verified. This also we got straightforward using leverage. Now using long process we got same number. 13.33 percentage. Write down the calculation as well as verification. Let me know if you have any doubt. Okay, I'll go further. Next, the percentage change in EBIT if sales changes by 10%. Now can you tell me what connects sales and EBIT? EBIT is operating income. Sales and EBIT, what is connected is operating leverage. Remember, sales and operating income. What connects is operating leverage. So let's do second one using operating leverage. Operating leverage we got as 3 times, which means if that connects between sales and EBIT. If sales changes by 1%, EBIT will change by 3%, 3 times. And they said sales will increase by 10%. If sales increase by 10%, EBIT will increase by cross multiply 10 into 3 divided by 1. That is, it should be 30%. Let's do verification. Sales increase by 10%. Present sales is 5 lakh, increase by 10% means 50,000. So you get 5 lakh 50,000 minus variable cost. Now variable cost also increase because that is the nature of variable cost. That's why it is called as variable. 2 lakh. Variable cost also will increase by 10%. So 20,000. So you get 2 lakh 20,000. So you get contribution 3 lakh 30,000 minus fixed cost 2 lakh. So EBAT 1 lakh 30,000. So what happened to EBAT now? EBAT increased from what was the previous EBAT? 1 lakh. 1 lakh has become 1 lakh 30,000. So 30,000 is the increase, but percentage increase 30,000 from 1 lakh into 100, that is 30%. Okay, third one. Percentage change in taxable income if sales increase by 10%. What connects from sales to taxable income? Beginning to end, that is combined leverage. So using combined leverage, sales to taxable income, that is EBT. Leverage we got 4 times. So if sales changes by 1%, EBT will change by 4%. If sales changes by 10%, EBT will change by cross multiply 10 into 4 divided by 1, that is 40%. Verification. I don't have to start from sales because sales change I've already done here, right? I can continue that. So new EBAT, when sales increase by 10%, I've already written that. So 1,30,000 new EBAT minus interest 25. So EBT 1,05,000. So what is the percentage change? What was the EBT? 75, right? Yeah, 75 became 1,05,000. So 1,05,000 minus 75,000. So 30,000 is the increase divided by 75,000 into 100. %40. 30,000 by 75,000. Same number you get 40%. So this problem is a very good problem to make you understand calculation of leverage as well as its interpretation and also the verification. And in the question they said verify, but if they ask, they just ask leverage and ask you to calculate the increase, you can do. Verification not required. Only if they ask verification, do it. Otherwise not required. Please go to the problem and let me know if you have any other doubts. Okay. Okay, let's go for the next one then. Okay, fine. Let's go further. The capital structure of Shiva Limited consists of equity capital of 20 lakh, share of 100 per value, and a 20 lakh of 10% debentures. Sales increased by 20% from 2 lakh units to 4 lakh 40,000 units. Selling price is 10 per unit. Variable cost amounts to 6 per unit. Fixed expenses amounts to 4 lakh. Income tax rate assumed to be 50%. You are required to calculate the following: the percentage increase in earnings per share, financial leverage at 2 lakh and 2 lakh 40,000 units, operating leverage at 2 lakh, 2 lakh 40,000 units. Comment on the behavior of operating and financial leverage in relation to increase of the production from 2 lakh to 2 lakh 40,000 units. So we have two levels of sales here. One is 2 lakh units, other is 2 lakh 40,000 units. And they've asked at 2 lakh, what is the financial leverage, operating leverage, and 2 lakh 40,000, what will be the situation? So let's do in a columnar manner. Units 2 lakh, units 2 lakh 40,000. So let's write sales minus variable cost. We get contribution minus fixed cost. We get EBIT. Do we have interest also? No interest, right? Oh, dear, we have debentures is there. So debenture is there minus interest. So we have EBT. Tax rate. Tax rate is also there. Minus tax. We get profit after tax. Divide by number of shares, number of equity shares. We get EPS. Okay, let's calculate everything. Sales. Selling price 10 per unit. So 2 lakh into 10, 20 lakh, 2,40,000 into 10, 24 lakh. You can do rupees in lakhs also to save time. Okay. Variable cost 6 per unit. So 2 lakh into 6, 12 lakh. 2,40,000 into 6, 14,40,000. So contribution 8 lakh. 9,60,000. Fixed cost 4 lakh. That is same for both the cases. 4 lakh, 4 lakh. EBIT 8 lakh minus 4 lakh, 4 lakh. 9,60,000 minus 4 lakh, 5,60,000. Interest, debenture interest, 10% debenture. That is 20 lakh into 10%. 2 lakh, 2 lakh. So you have 2 lakh and 2,60,000. Tax rates 50%. 3,60,000. No, 3,60,000. So 2 lakh 50%, 1 lakh. 3 lakh 60, 50%, 1 lakh 80,000. So profit after tax 1 lakh, 1 lakh 80,000. Divide by number of shares. Shares of 20 lakh. 20 lakh by 100. 20 lakh by hundreds, 20,000. So 1 lakh divided by 20,000, 1 lakh 80 divided by 20,000, you get 5 rupees and 9 rupees. Okay, and they've asked first one, increase in or percentage increase in EPS, percentage change in EPS. 5 rupee has become 9 rupee, so 9 rupee minus 5, so 4 rupee for from 5 rupees. So divide by 5 into 100, which is 80%. Okay. We'll calculate leverages. See if you have done till here. Okay. Let's go further. Let's calculate the leverages. So I'll go to next slide. Hope you have done. Units 2 lakh. Units 2,40,000. Operating leverage, financial leverage. They've asked only two, but I'll compute combined leverage also for discussion purpose. Contribution by EBIT. EBIT divided by EBT. EBT contribution by EBT. Okay, so contribution 8 lakh, EBIT 4 lakh. So 8 lakh by 4 lakh, 2 times. EBIT 4 lakh, EBT 2 lakh. 4 lakh by 2 lakh. So this also 2 times. Then contribution by EBT for our reference, they are not asked. 8 lakh. Okay. This what we are doing below this is only for our reference. 8 lakh by 2 lakh. 4 times. Okay. Now, just one thing. In the question, they've asked this percentage change in EBIT and we have done till here so many things. But had you applied the concept, then also you would have got the same thing. Let me verify. Observation, not required for exam, only for discussion purpose. Observation. Now, can you tell me how much sales have been increased here in this problem? 2 lakh units have become 2,40,000 units. Or you can say 20 lakh has become 24 lakh. Either ways. How much sales increased by? Sales increased by 2,40,000 minus 2 lakh. I am doing it in units. Divided by 2 lakh. So 40,000 by 2 lakh into 100. 20%. Okay, so we know the sales increase. Now, can you tell me which leverage will connect sales till EPS? Which leverage will connect from sales till EPS? Combined leverage, isn't it? From beginning to end. Combined leverage. So, using combined leverage, which is connects between sales and EPS. And we have got 4 as the answer. So if sales changes by 1 rupee or 1%, EPS will change by 4 times of it. And in this case, sales changing by 20%. How much EPS will change by? 4 into 20 divided by 1. So EPS should increase by 80%, and that is what we have got in two columns. See, without even preparing that second column, we can arrive at that profitability figure directly. That is the utility of leverage. Used a lot in financial planning and analysis. Anyway, so you can write down this observation for your reference. Then, okay, let me calculate the 2,40,000 units also. And we have to write the interpretation. But anyway, you write down till here. Okay, good. Let's calculate 2,40,000 contribution by EBIT. Contribution 9,60,000, EBIT 5,60,000. 1.71 times. Then financial leverage, EBIT by EBT, 5,60,000 by 3,60,000. One 1.555, let's say 1.56. Combined leverage, 9,60,000 by 3,60,000. 2.666, 2.67 times. Okay. So what they have cast, we have done. Percentage change in EPS we have calculated, financial leverage we have calculated, operating leverage we have calculated. Comment on the behavior of operating and financial leverage. Interesting one. You see, when we are having 2 lakh units, it was 2 times and 2 times. But when we increase the volume, the leverage level increased. Why is that happening? Very logical and as well as mathematical. Mathematical we have seen. Let's understand logical interpretation. Let me straight away go for the example. March 2020, April, May, June, July, Corona hit. Everybody. Now, who is affected the most? The big companies or the small companies? Who do you think are worst affected? Big companies or small companies? Definitely small companies, right? Big companies are not affected. They are affected, but they came back. They have good surplus. Do you think Mukesh Ambani is affected? He is worried about the corona fall. He is not affected because his profit will change, but his or other way around. A person who's drawing salary of 1 lakh, he will be worried about the corona or salary of 10,000 per month. Basically, person with small salary is worried more or person with big salary. Person with big salary is not worried. His entertainment has come down. His travel has come down. Are you getting my point? But for the smaller people, it's a survival question. Right? They're bread and butter, daily wage earners. They are the ones who is severely affected. That is the simplest example I can give here, which means because for the smaller people, they cannot afford the rent easily. They have to pay for their day-to-day expenses, fixed expenses. So company also, it is the same impact. When you produce less, fixed cost obligation will be there. You're worried, your rent I have to pay, salary I have to pay. As you produce more and more number of units, your risk will come down because you can pay easily your fixed expenses. You can pay easily your interest cost. Basically, when the volume increases, the risk will reduce. Because when your volume is high, you are in a comfortable position to pay fixed expenses. And that's what you can see here. When the volume increased, right? 2 lakh became 2,40,000. Volume increased. What happened to the leverage? Leverage reduced. So what is the question they asked? Comment on the behavior. So write down. Increase in volume. Increase in volume. Increase in volume resulted in. Increase in volume resulted in reduction in leverage. Increase in volume resulted in reduction in leverage. Resulted in reduction in leverage. Reduction in leverage representing lower level of risk. Representing lower level of risk. Representing lower level of risk. Understood? Okay, very good. So as I told you, this concept you have to apply in your life also. When you get more salary, your fixed expenses will not increase. Your rent will remain same. Your monthly telephone charge will remain same. So your savings will increase. Here net profit for the company, savings for the individual. And how do you make use of savings? That comes in your dividend chapter and investment decision chapter. So this is to tell you when a sales changes, economy change, corona situation or demonetization, GST, whatever may be, or IT boom in 2000, depression 2008. So when the sales changes, how it will impact various elements of the P&L account and companies with different volumes, how they react, how they affect. So if you understand the impact, you can prepare yourself accordingly for those situations. Anyway, hope understood. This is a very small chapter, but very relevant, important chapter from practical application point of view. So this completes leverage. So today we finished ratio analysis, cost of capital, capital structure, leverage. So basically we finished one chapter which is around financing decisions. We have done 3 chapters, but it's around only one financing decisions. Next, what is left out is investing decisions. Investment decisions, then investment decision with risk, working capital management. These three will talk about investment decisions, and then we have one dividend chapter also. I think if I start, I will not be able to complete, and I would like to go in a flow. So let's do one thing. Let us stop at this point in time today. Tomorrow when we meet, we can start fresh. We can start with the capital budgeting. We can go till working capital management, and if possible, we'll try to do dividend chapters. So tomorrow and day after tomorrow, I told you, I repeat myself, the session will be at 10 to 5. We may leave little early or maybe go for little late depending on the syllabus completion, but starting point tomorrow and day after tomorrow will be at 10 o'clock. Hope it is clear. We'll see you tomorrow at 10 o'clock. Till then, take care. See you. Bye bye. Have a nice day.